in developing countries, where there are regions where the gap exceeds 90%. It is necessary to take measures to reduce the protection gap, and with that, create more resilient communities. This forum is the second in a series of 3 events on the theme of climate and disaster risk insurance. The first forum on this topic was held in Panama last month. We've published the key takeaways on the A2II website. The third and the last forum will take place in Bangladesh in November. I'm very happy to see so much interest in this important topic. There are also people following us through the live stream. Welcome to our online audience. I invite you to join the discussion on Twitter. The forum hashtag is 16thCF, and we will try as much as the time allows us to take and address your comments and questions on today's topic. For those of you in the room, please know that your folders contain evaluation forms, and I would like to ask you to fill them in and let us know what you liked and what you missed, or you did not like, perhaps, in the course of these 2 days. This will help us to focus better next time. Now, I would like to introduce the organizing team here on the ground in Johannesburg to you. Contrary to what your agenda says, my name is Dunja Latinovic, and I'm here on behalf of the Access to Insurance Initiative. The A2II is the IIS implementing partner for financial inclusion, and our mission is to support the insurance supervisors so that they can promote inclusive insurance and in such a way reduce vulnerability. Also from the A2II Secretariat, my colleague Teresa Pelanda. She'll be setting the scene for the forum with her introductory presentation. Our Janice Angove will be moderating the panel 2 that is taking place tomorrow. Teresa Stevens from Semfree and on behalf of the Microinsurance Network will be supporting us in the room today. Now, to give you a quick overview of the program, this forum will focus on the closing protection gap for disaster risk insurance, considering both the role of the insurance supervisor and the industry players. Our experts will share their experiences of successes, challenges, and lessons learned in this area. Tomorrow, you will have an opportunity to explore ways of overcoming the challenges in the workshop session. We will start the forum today with an introductory presentation, and then after the coffee break, we'll have a panel discussion on the role of the supervisor. Now, I would like to invite Ms. Delphine Meidou, the incoming president of the AIO, to open the session officially.
Good afternoon. First of all, thank you for your presence for attending the 16th Consultative Forum on Inclusive Insurance. On behalf of the AIO and all the organizers, I would like to welcome you to Johannesburg. I hope you've been able to attend the AIO conference this week, which I think has been, I may be biased, but quite successful. The topic of climate change is one that is essential for all of us in Africa to commit to. I've been personally involved from 2 angles already, and I think we should all take the example. I've been the member of the high-level consultancy group of the Insurer Resilience Global Partnership, but also as a board member of the Africa Risk Capacity Limited. Some of you are present here today. Thank you. The mandate of both organizations is essentially financial inclusivity. As you know, 14% of the population of the world lives in sub-Saharan Africa. That same population only contributes 2% of the global carbon emission in the world. Yet, our population remains the most vulnerable to climate change. Despite all this, only 3% of climate financing makes its way to Africa. Most national catastrophes remain uninsured, and the only way to protect our population is through preparedness, risk management, and insurance. But this comes at a cost. So I'm hoping after your discussions in the next 2 days, you are able to come together with concrete action points towards finding and reinforcing resilience on our continent. But more importantly, we attend many conferences like this, we attend many discussions like this, but what are you doing personally on the day-to-day basis to support financial inclusivity, especially when it comes to climate change? I would like to now declare the session open. Thank you.
Thank you, Delphine, for these words, as well as for opening the forum. Now I would like to invite Mr. Cohen Martin, Divisional Head in the Financial Conglomerate Supervisory Department at the Prudential Authority, housed within the South African Reserve Bank, to say a few words.
Good afternoon, everyone. Welcome to South Africa. As I've been introduced, working for South African Reserve Bank, when you attend these kind of forums, normally there's senior officials within the audience. So I just want to say, if you're a designated person, hope you find by just saying today as good afternoon. So I would say that all protocol observed in that regard. We as a Prudential Authority, which is housed in the South African Reserve Bank, sees climate and disaster risk together with the bridging of the protection. Thank you, sir. Thanks. That's fine. Let me repeat that. We as the South African Reserve Bank, specifically the Prudential Authority, see climate change and disaster risk together with the bridging of the protection gap as a critical element in the future sustainability of insurance sector and a critical contributor to the real economy. In South Africa, climate risk was low. However, it significantly changed. So let me just pause here and give you a sense of what I've seen over the last couple of days when I looked at climate change. So on Sunday, like normal South African, go to church. I was in the Mass, and the lecture for that particular day was on climate change. But at the same time, I must say, the priest was a scientist, and he also spoke to climate change. So he was telling us the story of a professor at Wits University in South Africa that can do a scorecard for ESG, and specifically saying that, well, if you've got rehabilitation in that area, this is something on your scorecard, a negative. But the question that he asked specifically was, how do you value the lives of individuals? What will be the scoring of that individual? Again, that's climate change is important, and in South Africa, obviously, it's quite significant. So by merely listening to his sermon, it was quite inspiring. The other thing is, when you look at things like Press Reader, you look at, for instance, Mail and Guardian. In South Africa, I expected in a Mail and Guardian to have just one article about climate change in South Africa. But to my amaze, I could see five topics on climate change. So I just want to highlight some of the articles that I've seen in respect of climate change. So the one article was called Middle Charge with Breaching Environmental Laws. So you would know in South Africa, the whole issue of, from the 1st of June, there is a Carbon Tax Act effective. So in this particular case, Mittal Steel was charged, and as a penalty will be enforced against them. The second article is quite interesting, It's called Toxins to Take Your Breath Away. So that was looking at what's happening, especially this time of the year in South Africa, where you've got a lot of fires to keep warm because we're in our winter season. The next one was carbon catastrophe is hurtling towards us. And then the one that was clearly striking me was planet Earth declare an emergency. So if you follow what's happening in the UK, you will see that climate change is a state of emergency now in the UK. And obviously you will see from the regulator's perspective, they also had a policy statement issue. So a policy statement issue and put a lot of responsibilities to the insurers. So specifically this policy statement looks at 3 risk areas, and the one risk is a physical risk, it's the actual assets. The second one was your transitional risk, as well as the liability component to it. So there's a specific policy issue that came out and specifically highlight that climate change is a governance issue, and there should be a level of accountability at board. That particular statement goes further and states there needs to be a senior manager responsible for climate change within the organization. Okay, in South Africa, climate change specifically, we had 2 significant events in South Africa, and the one particular one was the Knysna fires. The Knysna fires was one of the biggest open fires, veld fires that hit a particular area in South Africa. It lasted for 24 hours and spreading across considerable distance. Numerous houses and businesses were destroyed, and unfortunately there was also lives lost. Drought, wind, and particular trees such as the eucalyptus tree, which is highly flammable, caused the particular fire and the continuation of the fire. A total estimated loss, Vivian, correct me, is about 8 billion that we've lost, of which between 2 and 4 billion was covered by insurers. That clearly demonstrates that there's a significant component of our population that's either uninsured or underinsured. Then the second event in South Africa that caused a lot of issues, both from a regulator's perspective, is what we called in Cape Town Day Zero, the Day Zero event. So in 2007 and spilling over into 2018, also saw the worst drought in the Western Cape. The water levels in dams in Cape Town and its surrounding areas at one stage became so low that there was a talk of a Day Zero event. So day Zero is basically, the levels is so low that you can't provide the water supply to the households. Fortunately, before the invocation of Day Zero, there was rain in South Africa, but that was quite a critical component for us because we've got 2 of our biggest life insurers that's sitting in Cape Town. Secondly, we've got our major non-life insurer in Cape Town as well. But it also emphasized the whole matter with regard to your own risk and solvency assessment, where these particular issues like a Day Zero or climate change was escalated in a form of a scenarios that has been built in their own risk and solvency assessment. Okay. As you all know, insurance plays a critical role in supporting the resilience and stability of the real economy. Insurers provide financial protections to individuals and business against risks they face throughout their livelihoods. Risks related to insufficient savings for retirement, big problem in South Africa, or events that affect income generating capacity like sickness and deadness. We also know where insurance sector does not provide protection against these risks are often transferred to the state and posing a real risk to the public sector. Having been a supervisor for years, insurance supervisor for years, we always realize the impact that we have on our country and the people in our country. Most of our countries have vulnerable economies and a lot of disparity amongst people in the countries with significant and other challenges our government face, like unemployment, poverty, etc. Therefore, we must have a critical role to play in our understanding of climate and disaster risk, and to see how we can influence and support closing the risk protection gaps. Obviously, in South Africa, as the events of the Knysna, as well as Day Zero, over the last couple of years, there there has been a closer collaboration with industry, government, and the regulatory agents. So there is a framework that we're working towards that will crystallize all these new initiatives. So some of the initiatives that we've taken over the last years, and it's mainly spearheaded by industry. I'm thinking of the Green Geyser. Secondly, the agriculture public-private project. Obviously, it's still in the running, but we are working towards this, where we're looking at, for instance, index insurance, for say. This particular consultative forum agenda was developed to assist us in a better understanding the risks and the risks we are facing and how to mitigate those risks. If for one, I'm really looking forward to the discussions and will be taking over the next 2 days, and would like to thank the I2I for putting this event together. In closure, thank you, and I'm looking forward to all the participation, obviously from regulators. Standing here as a regulator, we'll also learn more what the market participants will be doing. And obviously, we as supervisors must encourage, and in some cases specifically deal where we're looking at whether you call it the innovation hub or a sandbox. We need to look at how we can foster that innovation within the sector in order to make these kind of initiatives a reality. Thank you.
Thank you, Cohen, for this for informative and inspirational remarks, I'd say. Now, before we start off with discussions and the scene setting, I would like to invite Dubel Chamberlain, the chair of the Microinsurance Network, to take the floor.
Good afternoon. I have the privilege of being one of the people on the stage to welcome you. I think you've been welcomed thoroughly. I think my colleagues did a good job in making climate change real for you in terms of the continent, but also in terms of the country level and the dilemmas faced by policymakers and regulators. I was also privileged to be participating in or listening in to the AIO conference for the last 2 days. And it's been really inspirational to see how the agenda has shifted, that we no longer have to have these conversations as a side event, but it actually has been mainstreamed onto the conference agenda. So I applaud the AIO and your work in that regard. I represent the MIN today. I'm the chair of the Microinsurance Network, and I'm also the managing director of Senfree. We're a member of the network. We're a think tank looking at how we can unlock the financial sector and the digital economy's contribution to economic development. So this is a space that we think and live in quite a lot on. I'm not going to talk to you about climate change, but I am going to reflect perhaps on how we affect change to address things like climate change. Over the last few days, we've had discussions around complexity within our firm, and we just came under the impression of what complex environment we live in. And a complex environment is one where there are many variables which are uncertain, and many variables over which you don't have a control. And under circumstances of complexity, our old style of managing and planning and thinking about the future don't work. And I think this is a good example of that. So under complexity, where we don't know the solutions, we probe, we try solutions, we have conversations, we invite experts in, we share discussions across different categories of people who may have a different perspective or influence on those variables that we cannot control ourselves. The problem with complexity and things like climate change is also the fact that we cannot individually control it. And under those circumstances, it often results in paralysis, because what can one country or one regulator or one category of institutions even do, or sporadic desperate action, where we just try and do what we can. And I think the art of collaboration and coming together with our shared perspectives is the way of avoiding either the paralysis or the sporadic action and get us to systematically move in the direction that we all want to move. So the issue of climate change is not contested. By some perhaps, but I don't think this room would contest it. The question is, what do we do about it? And particularly, what do the regulatory audience and the insurance industry do about it? Because there are some aspects which affects you, but there are many aspects that fall beyond that. So the microinsurance network is a multi-stakeholder group where we bring together these various constituencies, the regulators and policymakers, the industry players, academics who think about these challenges, experts in the industry, as well as the donor industry who's looking to fund and support these various actors in achieving this objective. And we focus this on risk management for low-income households in emerging markets. So it focuses on the insurance industry, but it's not always insurance as we know it. And it's about emerging markets being able to be capacitated and informed to act. And many of our members are from emerging markets and come together to talk about topics like this. I'm very proud of this Consultative Forum because we feel we have contributed to its establishment and its predecessor, the Joint Working Group, and I've been working closely with the A2I in facilitating and informing some of these discussions. And I also just want to make you aware that this is not a workshop. The name Consultative Forum, I think, is important, and you must understand that what is discussed here has impact. The Consultative Forum and its predecessor has been instrumental in shaping IIS guidance on issues relating to insurance and inclusive insurance in emerging markets. We've shaped, together with the A2I, international standards. Those standards have been rolled out across emerging regulators across the world. These discussions shape the topics and the nuances of what will be taken into those spaces. It's also not just the regulators, it's the industry who can join these discussions and can have a voice and share a perspective. And sometimes we have to disagree. This is not an agreement forum. This is a consultative forum to solve complex problems, and we have different roles and different views. So I encourage you to take up that role in this conversation and constructively disagree if you think we need to move in a different direction. So this year, the focus of the Consultative Forum is on climate change. I think it illustrates this challenge of having to collaborate around a complex topic very well. And I invite you to join this conversation, to actively participate, and also to engage with the microinsurance network around a broader set of topics beyond climate change that we are trying to tackle in the industry. So with that, thank you very much for your participation in this, and I wish you a very productive 2 days.
Thank you, Dubel. So as Dubel already mentioned, the forum is a platform to foster dialogue between insurance supervisors and participants from the industry. It is also intended to be interactive with audience participation. We are welcoming audience participation in the room and online. We'll have several roaming mics in the room, and I repeat, Twitter hashtag is 16th CF, so please share your experiences in your area. Now, to setting of the scene for today and for this forum, I invite my colleague Teresa Pelanda from the Access to Insurance Initiative to give her introductory presentation of the topic. Teresa is an advisor at the Access to Insurance Initiative, where she supports capacity building activities and cooperation with insurance supervisors, focusing on the Caribbean and the CET regions. She is also responsible for the topic of climate change and disaster resilience. Teresa, I will hand over to you now.
Thank you very much, Dunya, for your kind introduction, and also from my side, a very warm welcome to the 16th Consultative Forum on Climate Risk Insurance. As Dunya had mentioned already, this is the second forum we are organizing on this particular topic, and it's actually a series of 3 events, so we will have one more event in November in Bangladesh. and I'm very pleased to give the introductory presentation to the forum today. I will try to make some references to the forum that we had last month in Panama, but I would also like to invite you to have a look at our website, where you will find a link to the full video, so you can watch all sessions from the event in Panama online. So, my name is Teresa, and I work for the HYI, the Access to Insurance Initiative, as Dunya have already mentioned. We are the implementing partner of the IAIS, the International Association of Insurance Supervisors, on inclusive insurance and capacity building. So our mission is to strengthen the capacity and understanding of insurance supervisors to facilitate and promote inclusive and responsible insurance. We do that on a range of topics related to inclusive insurance, but for this year we decided to focus on climate risk insurance and to do some further research on this important topic to also better understand what are actually the roles of the different stakeholders in helping to close the protection gap. We are currently working on a presentation on the topic that is also coming up soon. So for today, as Dunya said, my presentation is aimed at setting a bit the scene and provide some frame for the panels and discussions afterwards. So I will start with highlighting some of the challenges we are facing in light of climate change. I would then like to talk a bit about climate risk insurance, but also about the protection gap that we can observe in insurance. And conclude with some, let's say, considerations for stakeholders involved in what they can do to help building resilient or more resilient societies. In the last couple of years, we have observed an increased frequency and severity of extreme weather events like droughts and floods, cyclones, and so on. We only recently saw the devastating impact of Cyclone Idai in Malawi, Zimbabwe, and Mozambique. With about 3 million people affected, almost 1,000 people lost their lives, and over 170,000 were displaced. The World Bank expects that the cyclone costs these 3 countries more than $2 billion for the rebuilding of infrastructure and livelihood. And Africa is not the only region affected by these extreme weather events. What we heard in Panama was the heavy impact that had for example, the Hurricane Maria that hit land in 2017. And just to give you a figure, only in South America, they suffered $4.3 billion of damages due to natural disasters in only 1 year in 2017. So this is a problem that we are facing everywhere. And as I said, we are observing an increased frequency and severity of these events, and it is proven that climate change will even increase the number of such events. In 2018 only, 13,500 people lost their lives in all catastrophes that happened in that year. And what we see is that the impact is especially harmful on low-income populations. They do not only live in the most affected regions, but they also have fewer capacities to cope and to adapt to climate change. Lower-income people are more likely to live in flood-prone areas or in buildings that lack the latest anti-earthquake standards, just to give you an example. They are also less likely to have insurance or insurance protection. And the World Bank estimates that climate change will push an additional 100 million people into poverty by 2030. Also, a World Bank estimate is that the impact of climate change could reduce the global GDP by 3.3%. In the light of these potentially growing weather extremes, the need is greater than ever to support people in finding effective strategies to manage risk. And it's actually not only the immediate impact of these events. We also have to consider the effects that can persist over time, the indirect effects that persist over time. There are case studies of flooding in India, in Indian cities, that show that without social protection, disaster-hit families deplete their savings or borrow at high interest rates, often at informal sources, pushing them into poverty traps. Recent research also shows that disasters can affect victims for decades. Just to give you an example, a family hit by a natural or extreme weather event may have to reduce household spendings on food, medicine, education, which can stunt a child's potential well into adulthood. Besides these direct and indirect impact on the people directly, we should also have a look at the economical impact of such events. According to Swiss Re, the total economic losses from natural catastrophes and man-made disasters in 2018 were 165 billion US dollar, and only natural catastrophes events were about 155 billion US dollar. Sorry. Insurance covered about half of it, of the losses, and this is already the fourth highest figure for a single year and above the annual average of the previous 10 years of 71 billion US dollars. So I think everyone would agree that the devastating impact of such events is obvious and that we need to take action, and that the need to take action is greater than ever. So what can we do to make societies, and especially the low-income segments of the population, more resilient against these catastrophes? One important tool to build resilience is the access to climate risk insurance. But before going into more detail on climate risk insurance, I just want to highlight that insurance is only or can only be one piece of a broader risk management strategy. It's also not a silver bullet. Insurance may be the most appropriate tool for large risks of low frequency that cannot be reduced or managed otherwise. But in the case of frequent or less intense risks, there might be other more effective ways to manage these risks, like, for example, investing in improved or disaster-resilient infrastructure. So just to highlight that insurance may not be suitable in all contexts, and it is also not a standalone remedy to manage climate risks. But it is one very important instrument within an integrated climate risk management approach. And what I just wanted to show you on this slide is how such an integrated approach for disaster risk management could look like. So this includes a whole process of planning, implementing. So it starts all with the risk identification to understand what is the risk reduction, prevention, mitigation, creation of a culture of preparation. And then the third pillar here is the risk transfer, which includes, for example, insurance. Risk preparedness is also important. We have to invest in, for example, early warning systems. And of course, we need to have approaches in place for post-disaster response and recovery. So this is a whole process, and insurance is only one part of it. But let us talk a bit about more climate risk insurance, and I will just start with some definitions. So when we talk about climate risk insurance, what we mean is any risk transfer solution that aims to transfer climate-related risks. However, traditionally, claims are based on an assessment of the actual damage to the insured asset, whereas climate risk insurance quite often is based on an index. So that means that when a weather parameter reaches a predefined threshold, an index triggers the payout according to a payout right that was defined in advance. Such triggers could be, for example, rainfall, temperature, or also crop yields for an area. So that also means that in some cases, or quite often, value does not match the insured actual losses. So that's the difference between the traditional insurance and the index-based insurance products that we see quite often in climate risk-related products. So there are different approaches or levels where protection can happen. Insurance can protect people directly or indirectly. And on this slide, I clustered them according to the levels of protection. So it's actually, so the level here depends on who has the insurable interest. So it's not who is paying, but who is protected. So on the macro level, for example, we have governments that act as the policyholders. Risk transfer solutions that protect contingent liabilities that the government might face in case of a disaster or a weather-related event. So the government can use this payout to, for example, finance disaster relief programs after a catastrophic event. An example for this is the African risk capacity, and we will learn more about the African risk capacity during one of the panel sessions tomorrow. Then we have the macro level examples. This means that the risk transfer solution protects the so-called risk aggregators, such as, for example, banks or MFIs, agribusiness or humanitarian organizations that are offering key services to the low-income people, like, for example, microcredits. And then on the micro level, we have the risk transfer solutions that protect directly the individuals, like smallholder farmers, household small and micro entrepreneurs. One of the very first events, I just wanted to share that example with you because it was really one of the first events where low-income people were directly protected by inclusive insurance against a natural catastrophe. And that was when Typhoon Haiyan, a Category 5 typhoon, hit the Philippines in 2013, impacting over 60 million people and causing death of 6,300 people. Because of the devastation, the event was also followed by a large displacement, so it really had a devastating impact on the country. But this, as said, was for the first time. What happened was that a major event like this, people received payouts from their inclusive insurance products. Probably I should mention that the Philippines has been a leader in financial inclusion, so I think almost 30% of the people have insurance coverage, and the country has a comprehensive disaster risk management strategy in place where insurance is an integral part of it. After the event, over 126,000 claims, and maybe even more after this report was published, claims were reported and insurance were able to pay claims to people. Although the average claims payout of $108 may seem to be very small, this can be a very important and good starting point for people who just lost everything during this event. So as this case from the Philippines shows, insurance can be a vital tool to help people manage some of the risk related to these extreme weather events. However, the problem is that it's hardly available for poor and vulnerable people in developing countries. So the Philippines really are an exception here, I would say. So let's have a look at the protection gap. In 2018, only half of all economic losses from natural and man-made disasters were insured. In emerging countries, it's only about 10% of climate risks that were covered. Currently, only about 100 million people in Africa, Asia, and Latin America are covered by insurance schemes against climate risks. This is what we call the protection gap. It is usually defined as the gap between the economic losses and the insured losses, in this case from natural disasters. And this gap is extremely high in emerging and developing countries. As I said, it can be about 90 to 100%. And this is something that has not changed over the last couple of years. So when we look at Africa, the economic losses in Africa in 2018 were 1.3 billion US dollar, and the insured losses only 0.2 billion US dollars. So the protection gap is also huge here in the region. This figure, however, there are different definitions of the protection gap. This is probably the one that is the easiest one to measure. There are other definitions like the one from the Geneva Association that says that the protection gap is the difference between the amount of insurance that is economically beneficial and the amount of coverage actually purchased. So there may be also risks that are not insurable, and a certain level of risk retention also makes economically wise sense sometimes. So, but let's just conclude with whatever definition you use. What we can observe is that the smaller the protection gap is, the faster economies can recover from natural catastrophes. So on this slide, I would like to show you some of the causes for the protection gaps. So let's have a quick look at this graph, which I found quite nicely shows what are the reasons for the protection gaps in markets in different levels of sophistication. It does not specifically focus on the protection gap in climate risk insurance, but what I would like to highlight with this graph is that there are certain aspects that are crucial when it comes to development of insurance markets, regardless of the type of products. So let's maybe focus here on this slide on the developing and emerging countries. These are the ones here, they are called frontier markets and emerging markets. And this is where, as we saw, the protection gap is extremely huge. So what we see on the demand side, what are the reasons for the protection gap from a demand side perspective? It's affordability, awareness, and also trust and culture can be constraints in these markets. What we see on the supply side are transaction costs, are insurers that do not see a business case or lack the experience and are therefore reluctant to operate in these markets. But what I also wanted to point out is here that especially in the developing and emerging countries, on the supply side, we see how important the role of the supervisors or the role of regulation is. It is here on this slide that is called institutions. And this means that regulation can unintentionally hinder the development of sustainable insurance markets by creating, for example, unnecessary barriers. So let's now see what the different stakeholders can do to enable the development of the climate risk insurance initiative and help reducing the protection gap. So we will hear several examples in the course of these 2 days during the event. I just wanted to start with some considerations. But let me maybe start with just 2 frameworks defining who are actually these stakeholders involved in playing a role in closing the protection gap. So we have, for example, the Sendai framework and the SDGs that clearly call for action to all. This includes the governments, the regulators, supervisors, and the industry. The Sendai framework for disaster risk reduction that was adopted at the 3rd UN World Conference in Sendai in 2015 has a paragraph, it's a paragraph 36C, that's why I put it here on the slide, that clearly says that the framework, that it specifically asks the private sector financial institutions, including financial regulators, to integrate disaster risk management, including business continuity into business models and practices through disaster risk-informed investments. So this is clearly a call for action to all. And let's now look what that exactly means. And let's maybe start with the government solutions or potential government solutions. So first of all, the government plays an important role in risk mitigation. Of course, they are the ones who can encourage people to adapt risk reduction and prevention measures, and just generally establish a culture of preparedness. Governments also play an important role when it comes in the coordination of all the stakeholders involved. So the different public entities, the ministry, the regulators, and the industry, and so on. It's good to have someone who's putting together the work streams and coordinating these work streams. Governments can also support by providing public goods, in particular data. So for example, data on specific target groups can be provided by the government, or also they can make sure that agricultural data is available. And of course, they can invest in financial literacy and insurance awareness to help closing the gap. As we have seen, awareness is also one of the causes for the protection gap. They can also address limits to insurability, for example, through the provision of public insurance programs. And also measures that are widely used to support the outreach and the scale are subsidies and compulsion. So just to give you two examples, in Turkey, earthquake insurance is compulsory for house owners, and in Tunisia, I think they are just making plans to make all type of insurance against natural disasters mandatory. Governments can also support in risk financing, for example, by facilitating access to reinsurance or acting as a reinsurer of last resort, especially at the very beginning when the data is maybe still lacking some quality to be approved by international reinsurers. The government can act as a reinsurer of last resort. Or governments can also help local insurers to pool their risk and so have a better access to the international reinsurance market. Let's now talk a bit about the regulators and supervisors and their role in closing the protection gap. So I mentioned that we are working on a study on the topic, and as part of it, what we did was a survey to ask industry representatives whether they were facing any regulatory barriers when they design solutions, climate risk insurance solutions. And as you can see here on the slide, 77% answered with yes, only 23% with no. So this seems to be very much in line with the graph from the Geneva Association I also just showed you. So the second question to them were, what kind of regulatory barriers were they facing when implementing such solutions? And these are just some preliminary results. The first, many of them answered, was a lack of a clear framework that defines how climate risk insurance is embedded in the national disaster risk finance strategy, and more generally, the lack of clear regulatory framework. So it is important to have regulatory certainty to provide these types of insurance. Then some people mentioned that supervisors were not aware of trends or new products and therefore rather reluctant to approve them. So this is also important for supervisors to respond to these emerging technological trends and to support also the use of these new technologies. Then what was also mentioned a couple of times was the lack of insurance awareness in the countries. We talked about this, the demand is low. When awareness is low, the demand is is usually also low. In many jurisdictions, we see that there is no legal recognition of index-based insurance products. So this is something that the regulator can also support with by allowing for innovative products like index-based insurance products. Then we sometimes find limits on who can distribute insurance. So here again, the supervisor who can allow for innovative distribution channels, just like mobile phones or other online tools. Taxes were mentioned. In some countries, climate risk insurance is taxed higher than, for example, life insurance products. So it could be worth considering some tax exemptions for climate risk insurance. And we already talked about the important role of reinsurance, and also here the supervisor can help to improve the access to reinsurance and also to international reinsurance companies. So to conclude this slide, regulation can be an enabler, but also an obstacle for developing sound insurance markets. Sorry, I missed. Okay, so let's come to the industry solutions, and I just forgot to move the slide. So you'll find all the presentations online afterwards. We will share them with you as well. So for the industry, what does that mean for the industry? What can they do to help closing the protection gap? So we have seen over the last, let's say, 15 years, promising examples and initiatives, but there's still much to do. And first of all, I would say it's crucial that insurance companies understand and adapt products, processes, and distribution channels to reach the large uninsured population. For example, through driving product extension and innovation, embracing technology, and promoting microinsurance and inclusive insurance. They can also support through actively sharing risk knowledge. The industry they are the experts on risks and risk assessment, so they can share this knowledge to support the risk understanding within the public sector. Insurers are also in a position to encourage insurance take-up, for example, by offering incentives for example, lower the premiums when people adopt certain measures to increase the resilience of their houses, for example. So to conclude this, the existing protection gap is an opportunity for the insurance industry to both to grow and to help population to be better prepared to manage the financial hardship that disaster events can inflict. Okay, and I'm coming to an end now. So let me just show you this last slide, which actually was presented by my colleague Denis Garot at the event in Panama, where he did the introductory presentation. And it's just to highlight that that what is also the very important part of this event, that is the dialogue. It's critical. So let's start us with the dialogue and let us improve our understanding of risks and what actions are necessary to mitigate it. The next step when we leave the room is openness to make changes. And once you've made these changes, it is crucial to also monitor the evolutions. So are these actions that you are taking really having an impact, especially on the protection gap? Let's have some very final concluding remarks, and let me maybe just conclude by just highlighting what I said again. It's crucial, the dialogue, and I very much hope that this forum will help to better understand the roles that the different stakeholders have in building resilience and therefore bridging the protection gap. So let's start the discussions, and this forum is really meant to give you a platform for these discussions. So I'm very much looking forward to these 2 days of panels and discussions. Thank you very much for your time.
Thank you, Teresa, for this very informative presentation. This sets the scene very nicely for our afternoon discussions. It is now time for our coffee break, and it will be lasting 15 minutes. So just make sure to be back in the room sharply at 4:15 for the start of our next session and panel discussions. Thank you very much. And we're back. Thank you everyone for your patience. Thank you to our online audiences for your patience. We had a power shortage and our production AV crews here worked really hard to fix that. So now we're back on. And I hope you've enjoyed this extended coffee break as an opportunity to network and discuss some further. We will now begin with our first panel on the role of the supervisor in reducing the protection gap. And Teresa has clearly introduced this subtopic to us in her presentation. The panel will be moderated by Mia Tom from Semfree. Mia is a technical director at Semfree, responsible for their work in insurance market development. Mia joined Semfree in 2012, where her work focuses on exploring business models used to deliver financial services to the low-income market, as well as developing and supporting financial sector development-related policies to improve inclusion. Mia also manages Semfree's Risk Remittances Integrity Program with Financial Sector Development Africa to improve the role that insurance can play in development in sub-Saharan Africa, and is an active member of the Microinsurance Network and the UNEP PSI. Mia, you can come and take a seat. Our panelists and discussants are Abdel Jalil El Hafre of the Direction du Trésor en Ministère des Finances Morocco, Kerwin Martin, South African Reserve Bank, and Israel Muchena from Holland, Mozambique. Please welcome our panelists.
Sorry, I just want to, perfect, great. I just want to flag, we've got another discussant, Vivian Pearson from SAIA. So Vivian's the CEO of the South African Insurance Association. So I think, Vivian, I think we can, oh, you have to take the mic, sorry. We'll need some technical assistance here, thank you so much. Good. So I'm really looking forward to this discussion because what we've been hearing earlier today and also yesterday during the ARC discussion is that we're facing this problem of climate change and increasing natural disasters. But it's such a big problem that can often be very disempowering. What do we actually do? What do we as individuals in this room need to do to try and tackle this problem? Because I think often when we're faced with something that's so problematic, we heard issues earlier today of $1 billion. I think Israel will probably mention figures around the cyclone of Idai that's far more significant than those kind of figures. What can we actually do as an insurance industry and as regulators to help make our countries more resilient in the face of these kind of shocks and disasters? So I really look forward to the discussion by the panel. We're going to start with a presentation from Abdel Jalil from Morocco, and then we'll go on to a discussion from Kerwin, and then we'll have a panel discussion and questions from the audience after that. Thank you very much.
Okay.
Kerwin, do you want to join me?
Merci beaucoup. Merci beaucoup pour cette invitation. Je suis très content de partager avec vous aujourd'hui l'expérience, modeste expérience marocaine pour la couverture des catastrophes naturelles.
Concerning risk insurance,
Je vous laisse le temps de prendre
I'll give you a bit of time to put your headphones on.
That needs to go up. I don't know if we've got the...
Ok. Donc, comme beaucoup de pays dans le monde,
like many countries in the world, Morocco is exposed to risks of natural disasters. Most often it is floods, and sometimes with the loss of lives and important economic losses as well. Less frequently it is risk of earthquakes, with a very high impact on society. In 1960, there was an earthquake that took the lives of 1/3 of a tourist city. In 2004, there was another earthquake that took the lives of many people. So we have a scheme for insurance against natural disasters. We realized the importance of setting up a scheme for that reason, and since then we continued to reflect on the scheme up until 2014, when another earthquake occurred. We realized that we were still thinking about a scheme that did not materialize. The law was adopted in 2016, and this is the scheme that we ended up with. This is the subject of my presentation today. So I'm going to introduce to you the scheme globally. There are two parts, introduction of a mandatory insurance. There is also a solidarity fund that covers persons that are not insured. As I said, the scheme was introduced in 2016, and it covers disasters, whether they are natural disasters or caused by men. Natural disasters have been described by decree: floods, earthquakes, tsunamis. So we described it in a decree because it's simpler than the law. So we will be able to lengthen this list later. The selection of natural disasters has been listed based on their importance and impact in Morocco. I will talk to you later about insurance against disasters. So there is a decree from the head of government that declares an event as being catastrophic, and that is published in the government gazette, and it is also a matter for international insurers who accept the government gazette's publication. I said that there are two different parts. There is insurance for natural persons and companies that have insurance contracts, and also a fund for people who are not covered by any insurance contract. I'll speak about that a little bit later. That is managed through a public company that is a solidarity fund against natural disasters. So let me start with the insurance side of it. So the law of 2016 has led to the fact that it is not really an insurance, but it is a guarantee that is included in the list. That is damage to property, damage that is caused by a natural disaster or a catastrophic event. There is also insurance contracts for third parties, damage caused to third parties, and that covers damages to the vehicle and also injury that the driver may have, including their beneficiaries in case of death. It also covers the owners of the vehicle. and their spouses and their children, and also covers the death of the vehicle owner. There are other insurance contracts that cover a personal injury for the people who are not salaried employees. This guarantee is subjected to an extra premium, which is a percentage of the main premium. So in order not to have excessive risk in the scheme, the law has set up ceilings to compensate victims by event and by year. So the minimum ceiling is 2 billion per event, and 3 million dirham is approximately $300,000, and they have reached the ceiling of 9 billion dirhams. That is for natural disasters. For man-made disasters, the ceiling is 300 million of dirhams. In the case of these ceilings being exceeded, there is another amount that is introduced. So to support the insurance mechanism, the state gives its guarantee covering the default of an international insurer. In order to have this guarantee, the companies have to sign an agreement with the state, a convention that will give conditions and modalities of the guarantee. And also concerning reinsurance, if the FSEC gives an advance to the insurers. So there is also a solidarity fund dedicated to natural disasters. This fund was set up given the fact that the rate of penetration of insurance in Morocco is not very developed. Car insurance is mandatory, and it covers theoretically all vehicles that are on the road. And then there is property insurance that is not mandatory. So the penetration rate is about 2%. Therefore, the idea of creating a solidarity fund that covers persons who are not insured, that is managed by a public company, and it is managed by a director, and it is chaired by the head of government. The resources are from tax, and the main expense of the fund is for a personal injury and for loss of main residence. So the amount given is similar to a compensation for physical disability, and also there is a compensation amount for loss of resources, and also when a residence is no longer habitable, there is an amount that is allocated to that. It also gives the owner of a main residence enough money to fix the main residence. The ceiling of 250,000 dirhams corresponds to $25,000, and it is more or less the value of social residence. So to identify vulnerable persons, we identified a ceiling for the residents, and it is a way of forcing, in brackets, people who have means to get insurance for their residences. Let me now go to the conclusion. As I said, the law was introduced in 2016, and it was the entry into force depended on the decrees. But we realized shortly afterwards that entry into force depended on preparing a certain number of questions. First, we had to identify the risk. That is important to establish the premium, and it is also important when we have discussions with international reinsurers. So this will allow us to estimate the average yearly losses and the probable maximum loss. Of course, this depends on the quality of the information that we have. We have certain weaknesses in terms of data. We are working to improve on that. The model that is used in our country uses historical data, mainly on the earthquake and floods, and for tsunamis, it is just estimates. And this is based on man-caused violence. So historical data do not take into account climate change. So we are busy reflecting on how climate change can affect this model. The second important question is that we realize the importance of setting up loss management. We can use current mechanisms that all insurers use, but there is also an important role that can be played using new technology, drones, artificial intelligence, etc. But the choice of technology is so important that we need to be very careful when it is about poor countries with low incomes. And certain companies can be quite convincing. So the instruments have to be adapted to what the countries can afford. We also realized the importance of communication strategy. That will be different based on the insurance scheme. It's a communication to consumers that it is beneficial for them to buy this insurance. So it needs, they need to be told that they have proper cover. And in terms of beneficiaries of the Solidarity Fund, they need to understand that there are ceilings. The Solidarity Fund will not cover all losses. There are ceilings, and therefore they cannot expect everything. If they want full cover, then they have to buy insurance. There is also the importance of disaster risk finance to include that with the disaster risk management so that one complements the other. Because in certain cases there needs to be arbitration. So it will be more a matter of prevention, for example, the construction of a dam to avoid floods. So there is arbitration, and we need to see if we need to invest in prevention or invest in construction. And finally, we believe that the current scheme is a good beginning, and it allows the beneficiaries to have minimum benefit as far as personal injury is concerned. There are other aspects that are not covered, for example, drought. And there's also other economic factors that are not covered, for example, public infrastructures, and also activities that are not covered. So these are the areas in which we need to improve. Thank you very much.
Thank you. Thank you so much, Abdel Jalil. Very interesting presentation. I think especially the comments you make around thinking about prevention and the quality of data and what that means for how we can, what we can actually cover and what we know. It's very relevant things for all of us to think about. I'm going to hand over to Cohen, and then we can have a bit of a discussion about the Moroccan experience.
Okay. Thank you.
And Cohen, you can either stand or you can sit. It's
your
choice.
It's a conversation.
Perfect.
Yeah. So if I can just have the presentation on. So whilst we're getting that presentation, there's a number of items that was highlighted in his presentation that I didn't cover in this particular presentation, but there's a similar nature in South Africa. So I just want to highlight some of the insurers that's government-owned in South Africa, to just give you a sense what's the government-owned insurance activities in South Africa. So when we had a discussion earlier today, there was a discussion on SASRIA. SASRIA emanated from the 1976 South African Soweto riots, and there wasn't actually appetite within the insurance market, and that's why it was born, and government is the main shareholder there. So we not an insurer per se, but we also got a road accident fund. Road accident fund, it's basically funded through a fuel levy. But this is a fund that was established in the early 90s, 1920s, and it all changed over a period of time. So previously it was a motor vehicle accident fund. It transformed into the road accident fund, but it's also sponsored by government as well. So government is the main shareholder in that regard. But other entities within or insurers that we supervise as a prudential authority, we talk about the ECA, which is the Export Credit Agency in South Africa. There's equivalent to Export Credit Insurance in South Africa, which through a subsidy, which is called the Interest Makeup Scheme, provides cover for South Africans that does infrastructure development outside South Africa. And that's where the insurance, so you've got political risk in that particular country where this particular insurer provides cover. But we also have our unemployment insurance fund, which is not in this insurance under our supervision. That's another form of a type of insurer. Just back to the road accident fund, and it's mostly for bodily harm. Motor insurance is not specifically compulsory in South Africa, but when you use the South African roads and because it's based on a fault-based system and you're not a guilty party, the road accident fund will cover you in that regard. All right, so in terms of my presentation, just as an intro, this particular, just to latch on to the previous discussion, so that's why I've tried to highlight. So the focus of my presentation is mostly around risk protection gaps. And I've put a micro or inclusive insurance lens over it. So I would like to highlight and then specifically talk to, when we need to start thinking out of the box, where we've got artificial intelligence, machine learning, and those kind of things that we need to use in order to narrow that particular gap. So let me just start off with, obviously, in South Africa, or insurance as you know it, it's basically a well-documented and well-articulated in terms of the various roles that insurance plays in the economy. And specifically, if you look at big multinational insurance companies like a Swiss Re and a Munich Re, they've got well-articulated documentations how transmission channels the role that insurers are playing. Even the World Bank has a specific document. However, in essence, it provides the necessary comfort to a policyholder and also the peace of mind for society as a whole, whether you're an individual or a mega corporation or even a country. However, there are people around the world, and specifically in South Africa, where there's underinsurance or no insurance. In South Africa, culturally, where we've seen a proliferation of lower income participants in the insurance space is basically on funeral business, which we define as microinsurance as well as credit protection insurance. So in that particular space, what happens if you want to buy a couch, for instance, you need to have in some of the retailers, because most of that acquisitions are made through a credit extension. And it's the retailers that require you to have some form of cover in that regard. Another matter is obviously in the insurance space, because insurance is a grudge purchase. Most people are thinking because the intangibility of an insurance product, it's intangible, and there is a level of a trust deficit between either the provider of the product and the lowest, mostly from the lower LSMs. We understand the importance of insurance as a risk mitigation. However, there's still a large number of underutilized and specifically unappreciated by the low income. However, there's also a limited appetite from product providers to provide appropriate and value for money products to this particular income segment. Obviously, we'll have the discussion whether there is appetite within the market around this. So that's where I look at Vivian to just maybe kind of highlight some of those questions she wants to pose. And then just in terms of looking at the sources of this particular gap, household and government in South Africa are exposed to a number of risks and are not adequately protecting to responding to this particular risk, specifically climate risk. The reason for these protection gaps exists. It varies and could result in a possible lack of cover being provided or offered, the affordability, consumer awareness, and I think this latches on to what Teresa was doing in setting the scene. For this presentation, I'm trying to kind of highlight some of these reasons, like for instance, a lack of financial education, affordability of insurance, availability of suitable products that provides value to the policyholder. So let's just go on to the first, lack of education. So lack of education, so the thing that comes to mind is who should provide that education? Should we make it part of the school curriculum or not? Funeral and credit protection insurance is massive in South Africa, and this type of products are well entrenched in the South African insurance market. However, I believe we all need to do more to understand the other needs of those particular sector, the lower income market. Create appropriate levels of awareness of insurance as a risk mitigation to household. Explain and be clear in a simple product wording or contract wording. Highlight the benefits of of the particular instrument, the insurance contract, don't just focus on you need to explain the long-term value. Obviously, there's a number of initiatives in the short-term or the non-life insurance space where people can immediately, that instant gratification in terms of a cashback kind of thing, that also fosters a better understanding. But I think the important aspect is to understand the long-term value of that particular product. Right? And just looking at the availability of suitable products, again, without a proper understanding of the needs of this particular segment, you cannot design appropriate products that gives value to the policyholder. It is easier for insurance companies, and also this is another debating issue, to develop and design products that's already in the insurance population, and these products are normally profitable. So to create some of these products for the lower income, it takes time, you need to understand it, and obviously there's thin margins in respect of that. And again, as I indicated earlier, we need to think out of the box and harness, for example, technology, use big data, use machine learning to create an efficient and a cost-effective insurance model. Use technology in distributions. How does technology assist insurers in reaching clients to a large number whilst addressing the constraint of low margins and minimal financial infrastructure? What we've seen in South Africa is also use mobile networks, do digital marketing, artificial intelligence, and my favorite, chatbots. Technology can also be used as a claim adjudication. In particular space, in a claim space, it should be quickly processed and in a transparent manner to instill a level of trust. Some of the technologies that can be used is smartphones applications, but obviously, if you think of smartphones, it wouldn't regular payment of premiums and to speed up the claims payment. Better understand the customer in the low income market. What do you consider as affordable for that segment? How can products be designed to offer adequate and value for money? Again, technology can play a significant role in that, using big data to understand the patterns, the behaviors of those policyholders, potential policyholders. Obviously, I've mentioned in the intro, possible partnerships with public sector, where you've got a PPP project. Appropriate regulation, it comes back to us as regulators, to simple products and adopt a proportional to the risk. What we've done in South Africa is we've got microinsurance, but I guess microinsurance is not the silver bullet in respect of looking at that lower income. So the other obstacles that I think Teresa highlighted is where, for instance, a couple of years back, we've received a proposal in terms of index-based insurance. And we were saying, no, this is gambling, this is speculation, all that. But obviously, in terms of our new Insurance Act, the Prudential Authority has got the right to declare a product an insurance product if it doesn't have the key essentials of insurance. So we've got that ability. Okay. So the next slide is just dealing with the concentration of the risk exposures. So we need to again use big data to collect quality data to identify different types of concentration exposures. Like company specific, the industry, and also obviously a great a data center would be a reinsurance because they've got a holistic view of the market in some cases. Data sharing with those responsible for planning and building infrastructure. This particular point was quite key when I went through the Neisner Fire report, the Neisner Fire 2017 report, and the key learnings from that. And I will maybe highlight some others later in this presentation. Apply a risk-based framework for insurance supervision needs to be appropriately captured with the risks, incentives to diversification of risk. So the other item is just in terms of the risk protection. is to get, obviously, management practices, understand the prevention and response activities, like, for instance, as an early warning indicator, whether you will see the fire emergency centers are up to scratch. I think 2015 or 14, there was an event in St. Francis. And what came clear is that the fire department, although there was a fire department, but it was never utilized, right, or was limited utilized. So during the event, that crisis management is quite important. And we've seen that things like social media was used. But it also creates its own challenges. So you don't have a command center where this is the latest update, because everyone has become a reporter with social media, and they are tweeting or putting things on Facebook, and that particular issue can be confusing. So I think the key lesson that we've learned from this Knysna fires is to get a more appropriate communication in that crisis event. So it's important that we look at that as a medium that can enhance in the event, during the event, social media, but in a more controlled manner. Right? Just sentence 5. Okay, so let me go over to the role of the insurance supervisor. Obviously, in South Africa, with the Financial Sector Regulations Act, there was the creation of 2 regulators or supervisory authorities, which is the one is responsible for Prudential Authority, which I'm working for, and then we've got the conduct, which is the Financial Sector Conduct Authority. In addition to that, we also had an Insurance Act, effective from was in 2017, effective 2018. So that's for the supervisor. So if you just look at the mandates of the Prudential Authority, obviously our primary mandate is to safety and soundness of financial institutions, promote and enhance safety and soundness of market infrastructure, protect financial customers against the risk of those financial institutions that may fail to meet the obligations, and assist in maintaining financial stability. So quite key on our financial stability review for the early edition 2019, there was a box dealing with climate change or climate-related events. The conclusions that we've particularly reached, it doesn't have a systemic impact at this particular point in time. Right. Then the Financial Sector Act also, in order to achieve the Prudential Authority's mandate, must regulate and supervise according to the financial sector law, support sustainable competition, support financial inclusion. Hence, you've got a microinsurance framework in South Africa. So I'm just concerned with time, and I'm just going to highlight some of the objectives of the Financial Sector Conduct Authority is to protect the financial customer, promoting fair treatment to customers, promoting financial literacy. That's within their mandate. And obviously, my previous comment, whether it should be part of the schooling curriculum, they've got a specific mandate. And the question that I've posed under the risk gap is whether we can do it on this particular mandate on a risk-based basis, where you look at where's the biggest need. Right. I'll jump to the next slide, the second last slide. How can insurance supervisors be involved? Okay, create a regulatory framework. Obviously, that's key. So you don't want to create barriers. And within South Africa, obviously, quite highlight microinsurance. That risk-based, in order for risk to be more appropriately quantified, aids in protecting policyholders while being more capital efficient. Promote innovation and awareness, like, for instance, innovation hubs, sandboxes. In fact, in the South African Reserve Bank, there is an innovation hub. But we're in a process of looking at how we can create sandboxes in the Prudential Authority. Enhance cooperation between key stakeholders, sharing of data and information. Obviously, Vivian would tell you that on a regular basis we have conversations so to see how we can support and assist each other, whether it's going to be the National Treasury, the regulatory authorities, and the industry. So there is Like for instance, as I indicated, the current initiatives is the Social Agriculture PPP project, index-based insurance, the Green Geyser, with the Department of Energy. Furthermore, there's a working group of the financial sector regulated agencies and industry associations were established to develop a framework document on sustainable finance. So that's it.
Great, thanks so much, Kevin. So I think we'll probably go over a little bit beyond the estimated time. I hope everybody can still stay around for the next 15 minutes or so, because I would love to hear from our discussants if you've got any questions for the panelists, but also to reflect a little bit on your own experience, because I know Mozambique has recently been very hard hit. How do you cope with something like that as an insurance industry? And in South Africa, there's also been fascinating initiatives by the insurance industry, not necessarily even insurance products, to get involved in how risk is managed, like the Eden project with the Knysna fires and the agricultural insurance scheme. So, you know, I'd like to hand over to the two of you to reflect a bit on your own experience, and do you have any questions?
All right. Thank you very much for this opportunity. I really enjoyed the presentations. Because of limited time, I think I'll focus on one question. And before raising this question, I want to say a sentence which I would like you to remember, even if you forget everything else that I'm going to say today. It's a book that was published in 2004, same time as the earthquake in Morocco, 10 years after independence in South Africa, and it was by a well-known academic called Patrick Bond. And this book, I will not give you the full title, but the words I would like you to remember are talk left, walk right. Can I repeat it? Talk left, walk right. What was he talking about? He was talking about the risk that exists in Africa sometimes, that we have contradicted positions between our policies and our actions. And the question I would like to raise, and I would like for our presenters to reflect on their experiences in Morocco and South Africa, and as well for us, following this conference of the AIO, to think about the question which I'm going to raise. And the question is this: when you look at the history of development in Africa, after independence in the 1960s, from the 1960s onwards, at first, development was about the state intervening. Whether they were capitalist or socialist economies, when you look at it, the state was the central player. In the recent 90s and the beginning of this millennium, there has been a shift to market-based economies. So my question around sovereign structures, such as what we've had in Morocco, is: are we not walking left, talking right? Are we not contradicting the underlying fundamental macroeconomic philosophies that are supposed to guide the decision-making in the economy? And I'm not raising this because I believe that's the case. I'm just saying, let's be careful, because when we have these contradictions, I believe it's part of the reason why many of the development policies in Africa fail, because of internal intrinsic contradictions. So my question to us, when we talk about sovereign protection, is let's be careful in some of the markets like Mozambique that we're not walking left and talking right. Why is this important? For instance, one of the reasons why there's been a shift in terms of development, history of development in Africa, from state-based kind of capitalism or socialism to market-led economies, is because the states were perceived to be failing to deliver. So if there's an event for 200 million as per the limit in Morocco that is payable, what are the capabilities of a state such as Mozambique to be able to deliver? Microinsurance development agencies like to talk about, and microinsurers like to talk about access to the consumers. But are we also aware that there is also a problem of access to the government? How many governments can we trust with 200 million US dollars? And so I had lots of questions. I will leave it at that and say this is a question I'd like us to think about and just be honest with ourselves. Let's not just go through the motion without thinking about what underlying theories and philosophies we are following, because there must be a certain thinking that is, and principles that are guiding our actions. Or maybe we need to review our policies and theories so that they align with what we are trying to do. Because if we don't do that, we run the risk of not getting to the direction where we want to get. Thank you.
Cicero.
Thank you. I've been sitting here listening and thinking, I want to say this, that, and 100 more things, so I can't do that. I think everybody's raised some interesting ideas. I've never thought of the idea of having a fund with limits for the low-income people who are not insured, and using that as a driver to incentivize people to actually consider going to get insurance. It's an interesting idea. I agreed with quite a lot of the things that you were saying. The insurance industry certainly has a role to play in terms of innovation, in terms of technology, in terms of covering the protection gap. But what we are talking about here is an extraordinary risk. And I wanted to ask both the guys on the government side here, sitting next to me, what they think of public-private partnerships, because I do believe that this kind of risk cannot be addressed by either the insurance industry itself or by a government themselves or by a regulator in the financial sector by itself. It is my opinion, and the South African Insurance Association has many projects which we are basing on, we will do this bit if you will do your bit, government. And in terms of government, I am talking about a wider role for the wider government rather than just the regulators of the insurance industry. For instance, there's a protection gap, for example, in South Africa in terms of motor insurance. Because it is unaffordable. No, it's not unaffordable, it's expensive. But it's unaffordable for many people. Why is insurance unaffordable? And I think, I know I'm talking a little bit roundabout, but what I'm actually trying to say is non-life insurance risks and claims and costs are directly related to the broader environment. So why is motor insurance less affordable than it should be or could be? Is because there are risks of theft, high risks, very high risk of road safety, of road accidents in South Africa. That is not something that the insurance industry can fix in itself. So we need the broader engagement with government, the Department of Transport in terms of road safety initiatives, the South African Police in terms of law enforcement and the Metro Cops. That's an example of how these things work and how together in a wider community we need to find solutions that could work for both for government, the community, society, and the insurance industry. In terms of the climate change issues, again, climate change is happening definitely in South Africa. In fact, I've read a week or two ago that South Africa is deemed a hotspot for climate change. We're also not an insignificant emitter of greenhouse gases, unfortunately. So we need to take hands here. What we also have is climate change relating with the man-made environment. So we are sitting in South Africa with infrastructure that are deteriorating, infrastructure that are not maintained. Therefore, the risk of property insurance in South Africa is on the increase. We are sitting with a lack of maintained fire services. Therefore, when there is a fire, which may relate to drought and heat, then the insurance industry suffers total losses, where it could be partial losses. So I am asking whether the whether the fact that I'm raising the issue of there needs to be a broader collaboration with many areas in government, with the regulators of the insurance industry and the insurance industry themselves, and we need to seek partnerships to find solutions together. If I have time later, I will mention the agri-insurance proposal that we are doing, which is sort of, okay, I want to relate that to your question, because I think it's an important question. But
And I think it's worth talking about it, and also the process of collaboration that I think is very relevant.
Yes, I think that you raise a very important point, but I think sometimes there are market failures. Like, for instance, in South Africa, we do not have any insurance product available for smallholder emerging farmers. That is a market failure. Therefore, we need an intervention or assistance by government to get that market working. We're also facing a potential, very real potential market failure for commercial farming in terms of drought cover, especially in terms of multi-peril crop insurance. So we need to change that situation. The insurance industry is willing to change that, but we need the assistance of government. In terms of, for example, a premium subsidy or stop-loss cover or some other contribution, and here we are speaking about a business class, sustainability of a business class, but we're speaking about food security in the face face of serious droughts that are going to, we know it's going to be more and more prevalent. Therefore, the risk becomes almost uninsurable. And that is the reason that we are advocating public-private partnerships where we need it. Where we don't need it, I agree with you, we should leave people to look after what they know best. Thank you.
Thanks, Vivian. So maybe at both of you, I mean, both panelists have asked interesting questions around policy alignment, collaboration, and other matters. Would you like to respond?
Okay. So to your question, Vivian, specifically on partnerships, what does the regulators think about collaboration between public and private, and we can facilitate that particular role? I definitely, I think the regulator can do more in engaging government and assisting industry to have that collaboration. We have seen over the last couple of years, especially the initiatives by one of the bigger insurers, which I do think it's an excellent idea, where they kind of adopt a municipality and assist them with getting the necessary risk management in place. I think that's a very successful partnership between industry, in a specific case, this in particular insurer, and government. Obviously, a big issue for us with regard to when it comes to agriculture. A couple of years back, obviously, there was a significant withdrawal, especially from the reinsurance market in agricultural crop insurance. And we with industry walked that particular journey to enable a index-based insurance. That's something that we're still working on, and I'm sure we will be able to attain it. Obviously, I personally has participated in various discussions around that as well. Right? So government is also providing, in terms of talking specifically about agriculture, we've seen, and that's why we had a couple of years, in 2011 was a big issue for us, where there was a dry up of crop insurance. And then where we were hoping that a particular insurer, which is government owned, can breach that particular gap, like the land bank. That was looking at, but it's not fulfilling that particular mandate, and hence looking at innovative ways, like for instance, index-based insurance that we can use. So I think definitely from our side, to answer your first question is, how does the regulator or supervisors think about collaboration? It's critical for the success of this particular country. We as supervisors want to serve the country better. And if we can provide that facilitation or even work together, we will definitely do it.
Pour ma part, concernant toujours le partenariat public-privé, je voudrais signaler que le régime que je viens de présenter est le fruit d'un long partenariat public-privé. D'une part, les pouvoirs publics ministère que je représente et l'autorité de régulation, et d'autre part les sociétés d'assurance. Donc, comme je l'ai dit tout à l'heure, la réflexion a commencé en 2004. Et la version initiale du régime n'a rien à voir avec la version finale. Le secteur était certes prêt à introduire une assurance contre les catastrophes naturelles, mais initialement, il n'était pas très enthousiaste.
Of course, the public sector was not very enthusiastic because the risk was too high. They wanted a limited guarantee, and they wanted to be accompanied with guarantees that were more or less aligned to the international standards. But this is actually the result of a very strong PPP. And there are other things, though, is earlier on I spoke about the very weak penetration rate, particularly when you remove the obligatory insurance, this rate is even weaker. A few months ago, we launched a national strategy with a number of areas as mobile payment and inclusive insurance, and we are trying now to undertake a study to look at the different methodology of access to insurance initiative. ADESI. It is a study or a survey that should give us its results before the end of the year, and that is a way for us to see what are the gaps that do exist, why people are not subscribing to insurance, and we will see at the level of, the side of supply and demand. We will see how to really bridge or reduce this gap. I believe that we will be able to give you the results by the end of the year.
Thanks so much. So I think we are running quite out of time, but I'd like to just offer the opportunity for 2 or 3 questions from the audience, if there's any questions that you'd like to pose to the panel before we close. I think there should be a roving mic, so if you want to put up your hand and just introduce yourself, that would be excellent. They're in front here.
Merci. Je suis Kwakusi Eric.
Thank you. I'm Kwakusi Eric.
De la direction des assurances.
From the direction of insurance in Cameroon. I would like to ask a question to my colleague from Morocco. I was saying that at the level of financial resources, I did not get the indication that the state is contributing to that fund. But we believe that the state should be very interested because at the end of it all, it is the state that is the guarantor of the security and the well-being of our population. So the funding that is on the principal risk, where you take a percentage on principal risk, is that the major beneficiaries, which are the low-income people that are in sites where natural disasters, when it occurs, brings about very huge consequences. I believe that they should be able to have the participation of the state. Now, I don't understand why is it that they are so involved in the governance of the fund, because the board is actually chaired by the head of the government. Thank you.
I think we'll take 2 more questions and then we'll hand over for answers. Any other questions for the panel? Sorry, in front here.
Good afternoon. When the presenter from the regulatory authority of South Africa was speaking, I think she talked about one issue, which to me is very relevant in terms of risk management before, during, and after disasters. One thing that I am asking is that, to what extent are we engaging the communities where these disasters occur? Because I had an experience in Ghana where, for example, there was flash floods, and then we had a major disaster at hand. And then I called the national authority or in charge of disasters to come to the aid. I realized that it took them 4 hours. In the meantime, the community had mobilized and dealt with the emergencies that were supposed to be dealt with. It was after 4 hours that the national authority in charge of disasters and with delegations came to inspect the issue at hand. Meanwhile, there were emergencies and we've had incidents where people had gotten wounded. So to what extent are we engaging the communities? Because when it comes to response to disasters, I think the communities have major roles to play in ensuring that disasters are maybe minimized or even dealt with whenever they occur.
Thanks, Kingsley. Is there a final question? Good. So over to the panelists.
Shall I take the second question?
Okay.
I mean, what was quite clear from the study that was done on the Knysna fires was the communication, especially using social network. And communities are your reporters. They provide the latest updates. But what I was saying is that it must be done in a very constructive and a responsible manner. Because you've got access to this particular instrument, people can provide conflicting messages out there. And I think it's a good tool. We've seen that social media is powerful. Social media has caused collapses of countries. That's a tool that we need to use. But the emphasis is it should be done in a constructive and a responsible manner.
Alors, moi, je vous remercie pour la question.
I would like to thank you for the question and the interest that you have to the scheme. Now, you want to know why the state is not financing or funding this scheme while it is its responsibility to be useful for the community. Of course, the state is supporting us in many ways. First of all, the guarantee, if ever there is an issue, it will be the state that will intervene. Now, we know that there are 2 ways of funding. There is budgetary donation that will be given to the fund for it to start. And as you know, it will be done through a tax that will be dedicated to the fund to allow it to actually operate. And then you have another type of DRF, and that is managed in Morocco by the Ministry of Home Affairs, and that does fund all the preventive measures against natural disasters. So, like I said, the state is actually intervening in many ways. Thank you.
So I think we're ready to close. I would just like to ask all the panelists to just mention maybe one takeaway or thought that they've got for members in the audience that are interested to do something related to climate change. What's that kind of first action that you need to take? Because I think this can feel very overwhelming. How do you get a whole government to put together a disaster risk fund? But I think often there's a first step, talking to somebody, being open to new ideas, that kind of thing. That can actually make a big change if you add it up. So if I could just ask each of you to share a thought in terms of, what can each of us do to make this happen?
Okay, thank you. I really enjoyed the interaction and the exchanges. And given that the country where I am based was recently affected by Cyclone Idai, and as per the presentation from Teresa, the impact on the region was in the region of $2 billion US. Estimates from the World Bank put the loss, direct economic loss in Mozambique at $780 million US. That's nearly 4 times the size of the insurance market in Mozambique, although only 10% of the claims were insured. And I'm keen to look closely at the model emerging from Morocco and to see what options are available. Obviously, Mozambique today is not in the same position as the Moroccan government in terms of internal financial. In terms of the existing disaster fund mechanism, at 0.06% of the national budget, the government raises on average $10 million US. And if you add a recent donation from the World Bank, it comes up to $25 million US. So as you can see, it's an absolutely insignificant amount being raised relative to the risks that we are talking about. So we cannot talk about an internal saving mechanism of any sort. It will be important to see what sort of solutions can be designed and looking at models from markets such as Mexico, that have been able to come up with a combination of public and private sector solutions, and obviously looking at some of the solutions around how the protections can be kept in order not to exhaust the funds given the extreme nature of the risk in question. Obviously, the other key question that remains in my mind substantially unresolved is the access. I don't see many entities that have got actual access and that can deliver to the end consumer. And in fact, when Cyclone Idai happened in Mozambique, it also took out the telecommunications. People couldn't withdraw from the ATMs. So a lot of the ideas that we have were challenged by that particular event. So, but we take courage and we want to see what sort of options we can come up with. And we enjoyed this learning opportunity and we'll continue looking for solutions. Thank you.
Okay, working for an insurance association, we know that some things take long and sometimes you take 3 steps forward and 7 steps backwards. But that does not mean that one shouldn't try. So I think what we need to accept is that we are in an era where increasingly things will be abnormal. And the insurance industry is at the coalface of these changes. We need to work together As I said, I do not think any one single role player can fix this or deal with this problem. We need to accept that we need to work together, and I think that we have a very good example with our regulators and policymaker that we can talk and that we can convince each other, that we've actually in the agricultural insurance project, we've done the research together. We have had the World Bank help us at the request of National Treasury to get us where we are now, 8 years later. Another example of you know, don't give up before you start. You have to start, because then in another 8 years you will have your scheme. I think it took you 8 years as well. So the thing is, we are talking and talking, and we've been talking and talking for a long time on the risk protection gap. In the meantime, it seems to me as if there is a danger that the protection gap is actually broadening rather than closing because of these issues of climate change, the interchange with the infrastructure maintenance, and many of these kind of issues. So it is something that we can't fix alone, and therefore we should stop talking about the issues and start talking more to each other to find sustainable solutions that will be in the interest of our economies and our societies.
Alors pour ma part, ma contribution.
Now, as for me, my contribution would be to emphasize on the importance of developing national strategy for natural disasters, and it should be coordinated and should bring about a PPP. You should start with the diagnosis of the dangers that do exist, because before we started with the strategy, there were a number of existing initiatives, but there was no coordination, so the results were very modest. It is better to coordinate the risks, to assess them, to work on the different models. You have to, of course, know the risks, but also the actors, the role players. Who does what? The coordination should be given to a very strong ministry that could really give also better access to information and delegate the responsibilities. Certainly, it will be important to involve the private sector. You have to really bridge the gaps in that manner. What are the roles that can be played by the international cooperation, particularly in Africa? The donors of also look at the different like the World Bank, IMF, GIZ that could contribute and that are ready to help. We also have to associate academia, the researchers. I believe that all that is part of how to understand the risk and how to develop the scheme.
On my side, I think the important thing is communication, where all stakeholders can get together and have that conversation, not just having a talk shop, but also to inherently trust each other. If we want to make this particular country better, we must build that trust with each other. And that's how we will achieve significantly more with a collective views coming from diverse perspectives. So for me, obviously it's trust and have that communication, have that open channels with the regulator, have that open channels with the policymaker, in this case National Treasury, as well as industry with the various stakeholders. That's important. So that relation should be built on trust, and that's critical. You won't achieve anything if you don't have that trust in place.
Thank you so much. So yes, excellent discussion. I think the takeaways for me is that it's really critical to work together and also to be persistent. I think we've heard a rule of thumb of 8 years. If you haven't worked on it 8 years and are still hopeless at the end of 8 years, you need to continue. And I think we're all in this room because we have a role to play or an interest in this topic, and in the end, this only happens due to the contribution of individuals. It isn't the state that will do something or an association. It's individual people that are committed. And I want to give the panel a round of applause for an excellent discussion. Thank you very much.
Thanks. Thank you.
Merci à vous.
Thank you, Mia.
Thanks so much.
Mike.
Thank you very much.
Thank you, Vivian.
Thanks, Israel.
Thank you.
Wise words.
Merci.
Big thank you to our panelists, Vivian Pearson from South African Insurance Association, Abdel Jalil El Hafre, Karen Martin, and Israel Munchena. And special thanks to Mia Tom, our moderator. With this, we wrap up today, and we meet again at 9 a.m. tomorrow for the second day of the forum, where we will hear the industry perspective on closing the protection gap for disaster risk insurance. We hope that you join us here tomorrow morning. Thank you very much. Have a good rest of the day.